My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. You know, a lot of folks really want to get into real estate, especially into multifamily properties, but they think they're just too big to take down. They think they see all these syndicators and fund managers and family offices and whatnot doing 150 unit deals, 200 unit deals, these kind of things. But there's a whole world of opportunity in smaller apartment buildings. And today's special guest, Johnny Lynum, knows exactly about that, because that's what he focuses on. He focuses on smaller buildings, around 40 units and below. And that is a very, very good way to go about it, especially if you can get creative financing. So Johnny, welcome to the show. Great to have you.
Thanks, Dave. I'm extremely glad to be here and hopefully bring some value to the guests talking real estate.
I think you will. So Johnny, give us a little snapshot of what real estate-led investing looks like for Johnny Lynum as of the middle of 2025. Heck, we're not even in the middle anymore. We're getting close to quarter three of 2025. So what does the portfolio look like? What kind of properties? What's your buy box? What areas are you buying in these days, Johnny?
Yeah, no, great question. So right now, 117 units in the portfolio.
Nice.
Most of that is comprised of small apartment complexes. So a 40 unit, 24, 20, and 12 unit in Montgomery, Alabama, and an 18 unit in Panama City, Florida, and a few single families there in Panama City as well, and Mobile, Alabama. So that's the portfolio today. That I have, and really going forward, the focus is really, I'm bullish on the state of Alabama, the major metro areas that we focus in: Mobile, Huntsville, Montgomery, and Birmingham, and really looking 40 units and below, B and C class property. Looking at value add is our primary strategy.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Okay, very cool. So Johnny, I think you're in Virginia. So how far away are you from your properties in Alabama?
Probably, if I had to drive, probably about 12 hours.
Yeah, that's a long drive, man. So, okay. So one of the challenges some folks have especially with smaller multifamilies, is getting good property management. But it sounds like you've got quite a few doors, quite a few units in that one area. Does that make it simpler for you for getting good property managers?
It does now. I self-managed before my first 6 months of owning my 18 unit, which was my first commercial building. And I've been with that company coming on 5 years now with that property, the same one. And but Montgomery, totally different story. Luckily, all of my 4 complexes are co-located, so we can operate them as a single property. But I've been through 3 property management companies, and I've been with my third right now since October 23rd. October 23. And they're great, no issues outside of just kind of the normal asset management things that we kind of pay attention to as investors. But the first 2 were definitely challenging.
Okay, very good. Well, I love the fact that you're focusing on smaller properties. Now, in the information I was reading about you, Johnny, it seems like creative financing is something that you like to do. Maybe walk us through an example of a multifamily property that you've done where you got some creative financing thrown in.
Yeah, no, most definitely. So my 24 unit that I mentioned, so C-class property, I would say C plus. It was a low income. It was originally built into a low income tax credit program. We bought it from the owner. He owned that one free and clear, and built in 1998, 24 units, and he allowed us to come in with 100% owner financing.
Wow.
And yeah.
So question, why? Why would he do that?
Yeah, so 82 years old. So he was up in age. he was ready to diversify. And so one of the things that we found out, we got the 40 unit under contract first, and he shared property management with the other guy. And so once he found out we were buying his buddy's apartment complex, he asked, "Hey, let him know if we can work a deal out that he would be willing to sell as well too. That both of them were the original developers, and the properties were in the vicinity of one another. So we put a deal together. And
So
so
was he kind of looking to keep the income going? So he wanted the cash flow, but he didn't want the headaches anymore. So that's why he was willing to do it 100% owner financing, plus maybe help out with his tax burden as well.
I think it was a combination of the of both of those.
Okay.
But really for him, he was done. He was like it was a good time. He really wasn't involved in the property at all. And the gentleman that owned the 40 unit, they were really managing the property and had
Ah,
the
I see.
property management company. So now he was going to have to be completely uprooted, have to find management and all of those things. And so it made sense for him. And we ended up working a 3 year, 8% interest rate. It was actually 2 years with a 1 year extension. We had the option there for an extra year to refinance him out. And so it ended up working out really well with being able to get in with that amount of leverage and not having to raise any equity up on that deal.
Nice. So has it gone through 3 years and are you on the other side or is that coming up?
Yep. So we're on the other side. So we bought that fourth quarter of 2022. And now, we recently refinanced with a local credit union a couple months ago before the summer. And with that, we had about a $325 on average rent increase per unit. And so we were
Wow.
about 50% through on the expending that CapEx to renovate those units. But the unique thing that we found, especially with Montgomery, with not having a lot of new inventory come online, that we're able to get about $225 of that gap without having to make any renovations just
Wow. He
because
was
of
so it doesn't sound like the property management company was doing a very good job.
right.
Yeah, they were definitely under renting those things. Yeah.
Yep. And and they were somewhat limited because of the low income aspect of how they did it with the tax, where they could only charge a certain
I
amount.
see.
But the older property management definitely made the comment to me after the fact. When we used them for our second property management, that he had no clue that we would be able to get those rents for the units there.
Well, there you well, congratulations. That is a home run, Johnny. That is fantastic. So I think that's quite smart that you're going after that kind of size of property because a lot of, single family home investors, like that's too much for them to bite off. But those size of properties are kind of too small for the institutional type guys. So it's kind of a sweet spot, isn't it?
Right. And that's what I was going for.
Yeah.
As I stumbled into multifamily and I had that transformation that I could make the journey and make that transition from being a fix and flipper focused on the single family side, that I saw a lot of the big syndications, the rah-rah, the big conferences, and talking about the 100+ units and kind of the mantra that Grant Cardone kind of champions. It was like,
Yeah.
well, what about the smaller units that don't have property management on site?
Yeah. Let's
And
maybe not
they
worry so much about 10x. Let's go for 2x or 3x, right? Yeah.
right,
Yeah.
exactly. And
Yeah.
100% bonus depreciation made that even more advantageous.
Yeah. No, that is exciting stuff. So you're bullish on Alabama. Why is that? Why is that your favorite state for investing these days?
So originally from Alabama, so I'm a little bit biased, a little bit
Okay.
partial. So grew
Yeah.
up there, but and with me being active duty Air Force and moving around, seeing different markets, and just it always came back to my competitive advantage was having relationships, knowing the markets, and
Mhm.
it's always been affordable. Even more so today, just with where we are from a housing affordability across the United States, that it's always made sense. And I think from an economic standpoint, you look at Montgomery primarily, you got $2 billion being invested there in industry over the last 3, 4 years between car manufacturers with the Hyundai plant. Meta is building a data center there, $800 million price tag. On the Defense Department side, you have two Air Force bases located there, and you have the most recent F-35 aircraft that has been delivered to the National Guard there that's bringing about $25 million impact to the city there as well. And so just from those perspectives, you have Huntsville, that's kind of one of the top five, top 10 new markets that are continuing to grow in the United States, and Baldwin County as well too. I think right now they have a $4 billion steel plant being built in Daphne, and right across the bay you have a lot of from shipbuilding and Airbus airplanes being built there. So you have a lot of diverse economy, low property taxes, and cost of living is one of the lowest in the United States. So it just makes it a great area to invest, where you're able to still get a considerable cash on cash return on your
Oh,
investment.
that's exciting stuff. And you've got the inside scoop and you're from there. So it all just kind of it's a perfect storm there for you. So Johnny, there's finding deals, there's funding deals. Do you do all of your deals with creative financing or do you bring on investors from time to time as well?
No, great question. So I do bring on investors time to time, just depending on the deal, because of course we all know every seller isn't going to be in a position where they can offer seller financing. And so I've definitely in the past, brought on different limited partners in the deal or joint ventures, just depending on how much capital needs to be raised that
Mhm.
we can bring the deal together. And I think with smaller multifamily, it gives you that flexibility with the capital stack, where you can look at joint venture still. It doesn't have to be a full blown syndication where you have to liquidate and sell the property in 3 to 5 years. And for
Oh,
me,
that's nice.
really,
Yeah.
yeah, yeah, my
Yeah,
strategy is
long-term
all
buy and
is
hold.
looking exactly. Find a good deal, why sell it?
Yeah, that is you're so right there, Johnny. That's a pet peeve of mine with the whole syndication model is, you know, it's so short term for such a long term asset. It just never really made sense to me that you wanted to be in and out. I mean, I get it, but at the end of the day, a lot of times syndicators, they're really only making their money on acquisition fees.
Yep.
The back end is it's such a short time frame, as many people have found out recently, that doesn't always work out in 3, 4, 5 years, and some people got spoiled with that. So I think that's smart if you bring on joint venture partners who are on this for the long term as well. So what's kind of your pitch to potential partners about going in long term on multifamily deals? How do you show them the light of that versus other short term type investment opportunities like fix and flips and that sort of thing?
Yo, the great question, because it definitely has to be the right investor. And so really for them, the proposition is long-term cash flow, the write-offs that come with the 100% bonus depreciation that accompanies the commercial properties. But then also, we do look to target a refinance in 3 to 5 years where the majority, if not all, the principal is returned, and then they're
Mhm.
out of the deal, but they still can participate in the
Yeah.
cash flow from the equity side. And one of the unique things when we did the refinance, that there was a raise subsequently that came on with that to recapitalize and to bring in capital for the last 1/3 of the complex that needs remodeling. And one of the things that I ended up, after talking to a couple of investors, I allowed a convertible debt option where they could come
Okay.
in with a 3 year 12% annual return, and then at year three they have the option to where if they want to, they can convert that over to equity. And so that was something kind of a hybrid, just for those that weren't necessarily fully committed to long term, for a 5 year business plan when we would come up to our next refinance. That the 3 year mark, with the right interest rate environment, that we can look at doing a cash out refinance and allow them to be paid off, or they can go along and come on, convert over to the equity side and stay in the deal.
Yeah, smart, 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 smart. So one of the big benefits of being in this asset class over the last few years and having the long-term perspective is you probably didn't get caught up or affected like a lot of syndicators did with what's gone on with interest rates and property values and all that kind of stuff. What's your outlook or what's your viewpoint on that?
Yeah, no, it's definitely been a tough time. I've talked to people that have lost in multiple syndications, that was kind of their key strategy with spreading their LP investments across different operators. And some of the deals that, they were aggressive, but some of the deals that, just between Texas, for instance, that property taxes and insurance costs were just underestimated. That a lot of
Yeah.
it, they didn't really have the foresight to predict. And some of these properties have gone in foreclosure and things like that. But I think the opportunity going forward is, now we have where the rate environment is, and we underwrite to the NOI
Hmm.
today. And unfortunately, some of the operators are having those challenges with the higher interest rate environment. But I think that provides opportunities as we see more loans go full circle, debt matures. That a lot of the operators are going to one have to raise more equity to come into the deal or sell at a loss. And I think that's the future opportunity that we're going to have here in the next couple of years for operators that are looking to pick up deals. And so I think that's where the space is. And over the last couple of years, it's definitely been a bumpy road. But I think
Hmm.
being conservative with the underwriting and having a sound business plan is going to be the recipe for success going forward.
A lot of multifamily folks that I've been talking with are having a challenge these days finding good deals. Are you having that same challenge in Mobile or not so much?
It's been a challenge. It's been a challenge. The thing that I have focused on here, because I would tell you, like the last year, I've really been focused on working our operations, becoming more efficient with getting down our expenses and getting everything running as a smooth oil machine with our current property. And now, as going through, I think relationships are going to be key to finding those great deals. I know right now I'm underwriting two deals that a broker brought me off market from an investor that bought them 3, 4 years ago. He sold them to him, and now he's looking to diversify and kind of focus on the new construction side and
Uh,
building more single family homes. And so he's thinking about, hey, selling those properties. But you definitely gotta. It's a numbers game. You gotta underwrite the deals. But I think the key for new investors that are looking to transition into the space is having those key strategic relationships where you can see the deal flow, you can see those deals that are kind of being socialized behind the scenes before they hit the market, as well as being able to go direct to owner and have those conversations with a lot of baby boomers who are looking to stop being full-time landlords and try to kind of take a step back. And I think having that creative financing tool in your toolkit would allow you to create some win-win opportunities and pick up some really good assets here in the future.
yeah, I agree with you for sure, Johnny. Well, hey, so speaking of the future, where are you taking your company over the next couple of years? Where do you see things going for Johnny Lynum?
Yeah, so great question. So about 45 days from now, retiring from the Air Force after 20 years. So, and
Congratulations.
thank you. For the last couple of years, I've been doing consulting, kind of helping clients diversify from Wall Street and invest in real estate, whether that's on the active GP side of things or and putting deals together, or in the limited partner where, helping clients be astute investors and invest as limited partners or passive investors in deals. But one of the things that I'm doing right now, kind of made a strategic alliance with Right Time Financial. And so to be able to bring in more financial services, more in particular with alternative investments, working with accredited investors, with being able to offer up institutional level investments, whether it's on the commercial real estate side or on oil and gas, to be able to bring those type of institutional investments to more accredited investors and helping
Interesting.
financial advisors help their clients diversify, as well as insurance, estate planning. Now I'll be able to bring those financial services to build a holistic wealth building capability to my REI Genius community that was really has been focused on education up to this point and helping the investor on that side, but now actually being able to bring in financial services uh, through Right Time Financial. So I'm extremely excited about that partnership and getting a couple of securities license along the way here too. So it's really looking
So
good. I'm excited.
retirement's not going to be kicking back for you then, Johnny.
Not too, but now I can actually control my time. I don't have to
Yeah.
go into the office. I can talk money. I can talk real estate and help clients. I'm extremely passionate about helping people get their money right. For me, I came from humble beginnings and didn't really have the playbook when it comes to investing in real estate and the equities, the stock market, and really that side of it. So I'm really passionate about helping those that are looking to help themselves get their money right and to invest and protect their wealth.
Wonderful. Johnny, if people want to connect with you and find out more, where should they go?
Great question. So, yep, so they can find me online at my website, johnnylynham.com. and would love to have conversations. I host a weekly 8 o'clock every Wednesday, $1 million coffee hour. Just talking shop, bringing on great people to share investor strategies and tips and what's working in the market, and a platform just where other investors can network and continue to build relationships and do deals.
Oh, that sounds wonderful. Johnny, thanks so much for being on the show. It's been a lot of fun.
Awesome. Thanks for having me, Dave.
All right, everybody, take care, and we'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.